Welcome to Connect. What are you to do when you need money, you don't have enough for groceries, and you don't have credit? That is the topic of our program today. We'll be right back with Brando Sencion and I'd like to introduce Brando Sencion from the Santa Cruz Community Ventures. Welcome.
Thank you.
Welcome. And our major topic is predatory lending, but I'd like to start with you sharing a little bit about your connection with the Santa Cruz community.
Yeah, I was born in Watsonville, California. I've lived here my whole life. I moved away for 4 years to go to UC Santa Barbara, where I got my degree in political science. And I moved back, and I've been working in the community ever since, really. And I joined Santa Cruz Community Ventures almost 3 years ago now, and I've been the program coordinator there since then.
Right. So you said political science, you're talking financial.
Yeah.
Does it connect?
Yeah, no, there's definitely a connection. Political science is not just politics, but and with politics, money's involved. So there's always been a connection between money, and especially in my interest, it was international relations. So it was how countries interacted with each other, and money was a big thing. So
right.
Being able to put a sanction on another country, you can force a country to do something essentially. So money was always a topic, and it just kind of naturally too. My mom always spoke to me about money, showed me how to go shopping and make the right choice and how to save money in that way. So yeah, it's always been something that I've been interested in or do naturally in a sense.
Right. So I understand that you actually had a study with UCSC called Mamás con Más. Can you tell a little bit about how that came about? And
yeah, that study took place last year in around June 2018, where essentially what we wanted to find out was how the community or local mothers, Latina mothers specifically, manage their finances. And so we interviewed about 108 women, and we asked them just general questions like, what are your day-to-day lives like? Do you have a bank account? Have you ever used a predatory lending service? And we got a lot of amazing feedback, and there was a lot of things that stood out to us through that study. One of them was the fact that mothers were budgeting every day. They knew what they were doing. They just at times didn't have the specific terms or understanding to some aspects of the financial world, but we found a huge gap where credit was involved, how to build credit, how to get credit, and how to utilize it in the best way possible. Mm-hmm. So those were some of the big things that stood out to us.
So you said there was a credit gap.
Yeah.
How does that come about?
So there are different reasons. One of them can totally be culturally, coming from a different country into the United States, and there's just a whole different financial system, and not really understanding why credit is important. And so credit sometimes is just, I guess the term is credit invisible, which happens to a lot of families, even individuals who are born in this country and live here their whole lives. They're still credit invisible due to just like the lack of understanding. And sometimes it's also the issue with status, not being able to access specific financial products due to not having a social security number or something along those lines. So that could create a big gap.
Now, not having credit, you can't get a credit card.
Nope.
You can't do all kinds of things. I actually remember myself trying to get at some point a Mervyn's credit card. And since the credit card we had, my husband and I had, was in his name, I was not able to get a credit card.
Yeah.
Because I had not been in debt. we were together in that, for a house or something like that. But I was not personally, and so after he passed away, I was not able to get my credit card at Mervyn's. I assume many of the people who have never gone in debt, official debt of a car or a house because they couldn't afford it, they cannot establish credit, and then they cannot get a bank account and all that. So tell a little bit more about that.
Yeah, that's absolutely correct. I mean, it's funny, building credit is a double-edged sword, essentially. In order to build it, you have to get into debt. And so what really matters when you're building credit is establishing a relationship with the banks, essentially showing them that you're trustworthy. So my favorite example to use in the community is, for example, if I were to lend you $20, and I say, I'll pay you back next week. Next week comes and I'm like, hey, here's $20 plus $2. Thank you so much for getting me out of that situation that I had, right? And if I were to come back to you, let's say 6 months later to ask you for another 20, would you lend me the money?
Absolutely.
Right? Because I paid you back and I threw in some change for thanking you, right? But let's say I didn't pay you and then 6 months down the road I say, hey, can I borrow $20? Would you lend me the money?
Depends how much pressure you're going to put on me.
But most likely no, right? Because because I didn't pay you back. Right. So that's exactly what we're doing when we're establishing our credit with banks is we're giving them the confidence to lend us money, and we need to get into that debt to create that that transaction between the both of us to create that trust, or else there's no trust created. And that's what establishing credit is establishing credit to gain trust.
So, so you found that a lot of the women were budgeting, and they were able to save at all? Were they able to go bring some money to the bank?
Yeah, saving was definitely on top of a lot of individuals' lists. One of the main factors really was kind of the fact that low wages, getting paid low wages, and living in a very expensive area. So saving was difficult and it was minimal, but they are doing it, and they do it in any way possible, whether it's holding back from buying certain things or just shopping smart. They're doing it, but it's difficult due to those factors, really.
And then, of course, you have situations where you need quick money. Yes. For instance, if you have a car breaks down, or even, the food prices went up, and you just don't have enough money for food. So you need to hold over because the next paycheck isn't coming for another 2 weeks. Yeah. What do people do?
And so what happens when situations like that do happen, it's what we call, there's a financial gap, right? There's a budgeting gap. Money wasn't enough to make it that month. So what some individuals do is they actually turn to alternative services, like a predatory loan or a payday loan, for example, where they can go to the payday lender, they ask for, let's say, $300 or $400, enough to fill that gap for that week, and they promise to pay it back within the next week or 2 weeks or so.
When the paycheck
or next paycheck, essentially. And that there is when an issue occurs, because what happens is that predatory lenders don't really, they have specific tactics. They don't care if you as the consumer can pay that loan back. That's not their concern. So when an individual takes it out, the possibility that the next paycheck comes, they're still going to have that gap potentially and can't pay that loan back. So then they're paying fees to stay at top of it and not go into collections. And more than likely, that individual who took out that loan, or that payday loan, will get another loan to subsist for the next month.
So basically, you get further and further and
it's
further
a cycle.
in debt.
Yeah, it becomes a cycle due to the fact how they're structured, because they're difficult to pay back and the circumstance in which they were taken out. So there's tons of fees involved, and the interest rate on them can be up to 459%, I believe, which is very high when you calculate the fees that are involved and how it's structured within the week. If you do it in an annual percentage rate, it comes out to be up to like 400%. So it's extremely high. And so we caution the community to stay away from those loans and understand that they're not the best option. There are better options out there.
So, how many of those payday loan businesses are there? I saw some kind of statistic about 15,766 in 2015 payday loan stores all over the country.
Yeah, and I think McDonald's had 14,350 fast food chains. So there's more payday lenders than there are McDonald's in the United States.
Amazing. And I think you mentioned to me earlier that in more or less an average of per bank, there's 1.5 alternative services, but in Watsonville it is more like 3.2 services
to every traditional bank. Yeah.
So even though you're doing education here in Santa Cruz itself, but you also do a lot in Watsonville. Now I assume you have meetings, classes for people, financial.
Yeah, so at Santa Cruz Community Ventures, because of the Mamás con Más report that we did with UC Santa Cruz, we developed a program called Familias con Más, so families with more. And the whole objective of that program was to educate families around financial topics, specifically credit, and also talking about predatory lending services. So it was very important to us to educate families on how these services work and what they do and what they can potentially lead to if you utilize them. And also help families understand how to build credit in different ways, more traditional manner of doing it. Because sometimes individuals do look for alternative lending services as a way to build credit.
Right.
Sometimes the credit isn't reported, or it doesn't. It doesn't create any credit at all.
You mean the
times.
Payday lenders do not report it as you getting credit, so you can't get a credit rating?
Yeah, exactly. So there's like no, so you essentially do take out a loan, but there's no like revolving payment or anything of that kind. So it doesn't get reported, and so it doesn't really essentially build credit at times.
Right.
So we speak with families of looking at different ways, like getting maybe a secured credit card, opening up a bank account, and also understanding the bank and that there are fees involved, and there are certain fees that we do want to avoid, but using a bank is a lot better than using alternative services like going to cash your check at a local gas station or supermarket where they take a fee. So I believe in Watsonville, what we were told by families is for every $100, they keep $1. So if a family makes $1,000, they're going to keep $10 plus the change. So if they made $1,000.53, where they go change that check, they'll keep $10.53. So it's just keeping those things in mind and showing them that these are the reality and that's your money, and that money could be saved or put towards something else is really important for us to do.
And then, so where do you do those classes? In schools or in community centers?
Yeah, so there we do schools, but really we have strong community partnerships.
Okay.
So one of our partners, for example, is a affordable housing organization, or we do other nonprofits in the area. Essentially, any community partner willing to have us in a room and bring us a crowd, we'll be happy to do a workshop for them.
Right. And so give some information. What is the website for the Santa Cruz Ventures?
Yeah, so our website is www.sccvonline.org.
Okay. And you also have information for people because you're located at the Santa Cruz Community Credit Union, is that correct?
No, so we actually moved. So our offices are actually in Watsonville. Yeah.
Oh, they are in Watsonville.
We're co-located in the Watsonville Law Center. We have an office there in downtown Watsonville. So we're in Watsonville now, but we do workshops all over the county. So we do workshops in Live Oak. We do workshops in Watsonville, even North County and Monterey, like Marina or Castroville. So we're all over the county.
Great. Now, So the interest and the fees of these alternative services, including payday loans, they're high. Has there ever been any kind of legislation on lower those rates?
Actually, it is the California state legislature they actually passed what's called the Fair Access to Credit Act, which is going to limit certain alternative loans at 36%, which is a lot better. It's very high, but it's a lot better than something being at like 120% or 300%. It's still a very high loan, but that's the goal of that legislation. There's also national talk, for example, with Bernie Sanders and Representative Ocasio-Cortez of, I believe it's cutting off or making the national rate 15% credit on all consumer loans. So that would be nice, essentially, but it's a lot harder.
Not just nice, but it would be, because I think we're all part of our community, our local community, our state community, national community, economic community. If a lot of people are having so much debt, like students, for instance, have a lot of debt, that can have an incredible impact on the total economy.
Very. Yeah, and I think the average household has a $15,000 credit card debt. So $15,000. And that's just on credit card. It's not counting what would be even bigger debt with medical bills. It's just talking about like a consumer credit card. So the average family, essentially, which is very high. And like you're saying, that totally impacts everything. It impacts our ability to spend money in the economy. It impacts our ability to save. Multiple impacts just because of the fact that we have these existing debts and the interests are really high. So there's lots of money being lost to high interest rates, essentially.
Right. Now, I remember when I was a kid, we had, I think it was called the post office loans or something like that, a post office bank where we could, my mother would borrow money. It wasn't, it wasn't predatory lending, but it was there for people who had low income. Are there proposals of having something like that come back?
There are. I can't think of the name exactly, but I know exactly what it's about. Essentially, one of the things that have been in conversation at the national level was making the post office, like you said, a source of lending. Not only because they will make money off of it, but it's also because post office are everywhere in the United States. Essentially, every zip code has some sort of post office. So rural communities will have access to these post office that can give them loans. And the loans would be a lot safer than using an alternative predatory lender. So there's been conversations around that, having national post offices offer financial services to the community, even banking services to cash checks, deposit, withdraw funds, all that kind of stuff. Because what's happening after the 2008 financial crisis, a lot of banks actually closed down in a lot of communities. So it may not be so prominent, for example, in Santa Cruz. Maybe for some people, like someone in Aromas, for example, down in South County, it might be harder for them to go to their local bank. But for sure, like in the Central Valley, there's communities of 5,000 people who are maybe half an hour away from Fresno, a bigger city, and they cannot go and obtain or get access to a bank. But they do have a post office. So that would be a great solution for a lot of rural communities.
Okay. So are there any other, national or state resolutions to improve the situation?
Well, what we're doing at Santa Cruz Community Ventures is actually something a little more local. And through the study with Mamas Con Mas, we've been doing a lot of advocacy around predatory lending, especially because of the fact that for every one traditional bank, there's 3.2 alternative lenders in Watsonville. we've suggested some policy recommendations, such as capping predatory lenders within city limits. So in order for one to open, one has to close, because these are small businesses. So we don't want to attack small businesses, but we do want to limit the effects that predatory lending services do have on the community. So we've suggested some sort of capping, and Gilroy does that, I believe. So there's other cities that are doing it and have looked into it nationwide, but Gilroy is a close city that's done it.
Yeah. Well, going back, to my childhood, I remember my mother had a man come to the house who sold her clothes from a specific store, which was not cheap, but it was the only store that would allow her to pay off, her debt of buying clothes for us, which we needed. And we also had in our street, we had a grocery, a franchise from a conglomerate, and they also allowed my mother to, to pay, to get credit and pay off. But, every time when she had a tax credit, all of that money went over there, and then we started all over again. So at one point, I was 16, 17 in school, and, could do my math. And I figured it out for my mother. I said, if you now do this next tax credit, let's not spend so much, but this next child tax credit, give it all to them. Don't go back to the store, go to the supermarket. It's way cheaper. Mm-hmm. And so it made sense to her, she did. And, there was this really a relief in our whole family about what we were able to buy, because sometimes, there was just not enough food. Yeah. And so it's something that I guess, to stay away from lenders like that. And I did not know the word predatory lending. Yeah. But I just intuitively felt that it wasn't the right thing to do for my family. Yeah. And so since you always talked to me, I suggested it. How do you tell people to stay away from predatory lenders?
Yeah, I think the biggest way to connect with community is to share an example, just how you did now. And one of my favorite examples is an individual we helped who had a loan for a vehicle that he had purchased. But this vehicle had a 26% interest rate on it. So his payments were $700 a month, and so $500 of that was going to interest, and $200 was going to the principal payment. So he was very slowly paying off that vehicle. Right. If he would have kept that rate, that car, I believe it was like a $28,000 car, would have ended up costing him about $50,000 at the rate it was because of such a high interest. So what we did is we helped him refinance that vehicle, and he was able to drop that payment to about, I believe it was like $500, but at this point, about $400 was going to the principal and $100 was going to the interest. So it was a huge benefit to him, and I think that was a clear-cut example of what a predatory loan is. The individual who sold him that car didn't care if he could pay it or not. They just wanted to make the sale.
They want to have constant income.
Yeah, and it's more than enough income, and even the bank who gave the loan out, they know what they did. They gave a loan with super high interest. They were making profit, and it's great for them, but it hurts the consumer. So I think those clear-cut examples of what that looks like in an individual's life, and the difference of paying $500 and actually paying down your car rather than giving $700 and doing nothing. It's a big eye-opener for a lot of individuals, and it really resonates with a lot of people. And I've been to multiple workshops where people start raising their hand. Oh, that happened to someone I know, or it's happened to me, and they kind of start putting the two and two together, that these things, they know they exist, but they put a name to it, and they kind of start understanding the system a little more. Like, you totally want to avoid those alternative lenders because they will get you, and people learn from that, and I think those examples really do resonate.
Now, I remember that we worked together one year on filing taxes for low-income people. Yeah. And one of the things that struck me every year, I've been doing it for like 10, 15 years, I don't remember, that people would come and say, last year I had my taxes done, and they would give me an amount of money that we thought I would get back, and so they would basically loan it to me.
Yeah.
Until the money would come in, and then I had to, give them the money with interest.
Yeah.
And so then we told them that if we file these taxes electronically, it is going to be 2 weeks and you get the money.
Yeah.
Can you hold out for 2 weeks? Because why would you have, if you get $500 back, why would you borrow $500 from this person who is not a bank? It's somebody who's doing your taxes, and we don't even know if they were, certified tax preparers or not. And then you have to pay. So there we also did some education.
Yeah.
And that's where, you and I, work together.
Yeah.
And do you have any other situations like that with when people file taxes?
Honestly, no. I think that's one of the main ones, though. It's those expected tax credit loans,
right,
or whatever they're called. But yeah, those are very popular because people expect a certain amount. But then what's crazy too is that the tax code changes every year.
Right.
And situations vary every year. You make a little bit more, a little bit less. And so these individuals are left in a very difficult situation.
Right.
And that's one of the very popular things. There are multiple types. I mean, there's predatory loans, there's tax loans, there's car title loans. Banks are even doing it. Certain banks do certain type of what would be a predatory loan, mm-hmm, where they're essentially giving a loan based off of credit risk. Mm-hmm. So if they have a bad credit report, it's a lot higher interest rate. They knowingly do that. And so these are things that we need to be aware of in the community and try to avoid as best as possible.
Right. So it looks like this is a conversation that needs to continue. Unfortunately, we're done. Is there anything else? You have 15 seconds. Anything else that you want people to know? I
would just say, stay educated and ask questions, especially when it comes to credit, any type of credit loan or anything like that. You want to ask the right questions and make sure that the interest rate's right and things aren't going to get out of hand in the near future. So definitely ask questions. Well, thank you, Brando, and thank you at home for watching Connect, and until next time.